All right, let's jump into things. Where we at? 12:37 on Saturday, the 12th of April. All right, so look, let's start off with gold. I mean, how can you not sort of start off with gold? This is just insane, this move. Like I was just looking at a chart before, which we'll just replicate now, just for the sort of somewhat fun of it. Well, fun of it if you're on the right side of it. Unfortunately, I wasn't this week. Um, this is the move that we saw from high to low. So low to high, sorry, finishing up around here. About 10% we saw on that move there. Now, if you look at what it generally takes you 10% to do, this is on a weekly chart. We've got 1, 2, 3, 4, 5, 6, 7. 7 weeks it takes to do this in buck term moves. And we did this in 2 days from low to high because remember we got smashed down. If we jump back onto the lower time frame, this wasn't sort of like from open to close. We sort of started the week on a very bearish note with everything actually, which sort of I'll unpack a little bit. Excuse me, as we sort of get into it. But it was that is just straight up. And yeah, that's an incredible move. And this is what I was sort of saying sort of through the week and that. And I kick myself and I should sort of be like, oh, you know what, cut these things early and swap. And oh, well, that's life and that. But what we can sort of see now was that rounded bottom was coming into effect. We didn't get that volume to push it down. And this is what we were looking for, this to sort of roll over, come down here and have that volume push it down here and then possibly springboard back up. But, we didn't get this. We sort of went up and it just went up and up and up and up, very unrelenting. If we take a step back on that, we can see that really this little breakaway channel that we sort of highlighted for the resistance over the top over here is what sort of held. And a little bit of an overshoot here, a little bit of an overshoot here, and it's just gone end to end and also closed up out the top of it. So this is just, basically disregarding this long-term channel, disregarding almost this breakaway channel. I mean, that sort of V-shaped recovery like that. I was saying this, I'm like, surely this is just hitting stops or something. But, if you stop and sort of break it down as to sort of, what is gold actually doing? Well, US dollar, obviously, I'll get to in a moment, but that is getting absolutely hammered. Broken through 100. It's a little bit of a bounce into close, but, it's really just a flash in the pan in regards of how big that whole move has been. So, look, people are selling off. They're still hesitant about equities. They're selling off the US dollar. The yields are rising, so bonds are getting sold off in the US. It's all breaking. And people are like, well, where do I want to sort of pop my money? And this is why, if you look at this move here, there wasn't really sort of like, a moment of like, there was this little drop down here. This was, I think, when one of the responses for the tariff things that happened, bang, bought straight back up. These are very shallow pullbacks. So it's just sort of like people are just going, they're not, because the thing is, okay, if you're going to put if you're worried about the sort of state of things and you're like, okay, well, we just saw this massive crash at the start of the week in the equity markets, people losing like 10, 15% of their sort of portfolios or sort of like, some of those individual names down like 20, 30%, these kind of things. I don't really cover stocks a great deal in that, but, we all saw sort of like, X amount of trillions wiped off in minutes, and then it all came back on, and all this kind of sort of fluctuating up, down kind of sort of stuff. You're gonna be like, geez, look, do I want to sit my money? Like, we're not talking about sort of traders that are sort of like, sort of going in and out of things. We're talking about people that are sort of like, parking their money in something for a period. Excuse me. Do you want to sort of put something in something that could effectively just hear, oh, some escalations happen with the trade war and bang, it's down 20, 30, 40% overnight. No, you want to put it in gold because gold, look, at its worst, well, particularly here, we're seeing this very strong. But, really the reason that you put money in gold is because if it has a bad period, if it has a bad sort of like whack, it goes down maybe 10%. We've seen the crashes. We know that these ones, I mean, even this sort of sell down through here, I mean, this is pretty hectic, apart from the fact that it got bought straight back up. That was down 6%. You think about this with sort of like, just for example, $100 billion. I mean, it's still a lot of money. It's 6%, but it's not 20%. It's not 30%. And this is why people decide to sort of put their money in these sort of things, because it is in some regard somewhat stable. And you can see that these things are a little bit more like, okay, well, let's just put it here, wait for the storm to pass, and then sort of see what happens with it all. And obviously that's just why it's the money. It's just going up and up and up and up because people are just they're not paranoid, but they're just sort of like, look, you know what? We don't want to deal with this kind of fluctuations. Let that all pass. We'll park it here, and more people park it, more people park it, more people. This thing did 10% from lows to high. I mean, not only is it a store of wealth, it's actually a place to generate money at the moment. And 10% in 1 week on gold, that's insane. 200 bucks. I mean, again, the higher you get, you got to equate for how big these buck moves are, and you got to, like, as a trader, you need to position you need to adjust your position sizes accordingly. But again, look, that's 10%. That's 270 bucks in 1 week. Well, not even in 1 week. I mean, what day was this? This was Wednesday. So Wednesday, Thursday, Friday, 3 days, and it went 9%, give or take, 9.5%, whatever. Absolutely insane. And the thing is, as you can see, it drops down, moves up, drops down, moves up, drops down, moves up. It did look like it was sort of flattening out a little bit into the end of the week. But again, like I always sort of say with the stuff, end of the week, you kind of disregard. You don't think too much of it. I mean, look, even this, it closed on a very bullish note. We're like, what did it hit? 45 as a high, closed at 37. You know, this thing is just being bought up. So we'll see how we go this week at that. Look, I mean, if we have a look at this is just flicking through all the different time frames. If we see this here, this was that sell down we saw, and then bang, solid, solid, solid up like this. So look, if this thing is to sort of pull back a little bit, we'll probably see a 1 or 2 days similar to this kind of thing before we do see some sort of sell down. I don't think this is just going to go straight back down into it. I mean, look, 10% in 1 week is insane. Headlines can come out at any time, but you got to sort of think, equity markets. I'll have a look at that in a moment, even though I don't really cover it. It's a great deal on this. That you got to see this sort of stuff recover. You got to see people sort of want to actually sort of put their money back in these things, and particularly US dollar. They're going to be the places that people will see value and then drag it out of gold. But till you see value there, you're not going to see those things move. So where we finish, we went to 47 or something. So there's a high, something like this. So just an insane, insane, insane move. And, it's hard to sort of see this thing sort of, slowing down. You can see the size. Excuse me, this on a daily candle. These are your dailies, your big moves here. Here's a big day here. We went 35. That's a 50 buck day. We just did, what's this, 83. There's a 100 buck day, 79. There's another 100 buck day, 79, 40, 60 buck day. Like, it's just insane, these sort of moves. Completely. So it's disregarding all sort of technicals, really. It's blowing out the top. Look, this thing, the way that this RSI is ticking here, is opening up and coming off this oversold area down here. This could get very, very ugly to the top side. So it's something to sort of keep in mind in that. And it could really sort of be sort of telling us something. So come the new week, let's have a look. 4 hour. Look, I would take not really anything from the fact that this sort of went sideways into close, because that's just the end of the week, and that closed right up on the highs and that. Expect this thing to sort of blow out the top. I've been sort of looking for these. So there's a couple of tops that I look for in gold. One is a straight line like this, like we saw here, this little bang, 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 and this sort of worked out very well. The other is one that was, I always reference this from back in December 23, but the difference with that one is that was a stop hunt, and we saw things go whoosh, and sort of shoot right up through the air, and that 50, 60 bucks in 15 minutes. Keep in mind, that, as I keep referencing these 50, 60 bucks in 15 minutes, we've been seeing that pretty much every candle sort of through here. So, that's no longer a sort of, wow, went 50 bucks. It's now sort of, almost the norm recently. Look, this thing can't carry on forever, but it can certainly move higher. 127 retracement, 161 retracement. God forbid it goes to 216 retracement. You know what I mean? It is really it's just going vertical like this. in normal sort of conditions, if you saw something move like this, as I've referenced a couple of times, this would be sort of smashing all stops and that, and then you'd expect some sort of bigger move down. But, at the moment, this thing is just really just going like a freight train up through the top until something changes fundamentally, sort of with this whole sort of, China trade war thing with the US. I don't see a reason for this to sort of automatically sort of come back down. This was the moment to stop out everybody and wipe out the book, suck in the shorts. Unfortunately, I got caught in this debacle. I shorted all the way down through here, kept it down here, and then got ripped up, sort of going back up through here because I thought, look, surely this will sort of roll over here. Surely it'll roll over here. Hindsight 2020, that's great. I gave back a whack. I had an amazing start to the week. I really sort of capitalized very well. Probably one of my best weeks in 2 days. And then I handed back a bulk of it, sort of through these sort of moves through here. And yeah, that's life. That's trading. It's frustrating, but you know what? Good with the bad. We'll fight on. All right. So anyway, that's gold. Look, if this channel does break, we could sort of maybe see some sort of like pullback kind of thing. I mean, these kind of moves that are just completely unrelenting, they can't, even if they are going to go up higher, they've got to cool off at some point. So, you drag the fib here. As I said, this is closed very bullish. I wouldn't be surprised this gaps up, $30 or something on open, given how it's moving at the moment. Look, if it pulls back, I'll start marking in the opens. So we've got the open here. That comes in line with the 23%. That's going to be an area which I could see the market just go, yep, cool, let's buy back up again. I don't see any sort of deep sort of pullbacks. I mean, no pullbacks at all really here, flying all the way through. There was a period years ago. Actually, let me find this. It's a bit easier than sort of going through. It turns out I've already got it marked. This was the part that I sort of remember, and I sort of referenced this. This was in 2020. If we look at this sort of sharp pull down here, and then boom, straight back up, consolidated around those highs for a little bit there, but look at the move that it went on afterwards. And this is what I'm saying, that, this is potentially what we could be seeing here. Look at how much it took. If we look at this as a daily, so if we put this on a weekly as well and have a look, I've got to find it again now. Where were we? This period here. This is very similar in the sense of, look at this sort of sell down here. Look, ages to go up, came down here, wiped out all this lot over here, and then moved up here. A little bit different in what we're seeing, just now, because apart from the fact, look at where we are. It's insane. We didn't get the big sort of, that would have been a sell down to like, over here and then moving up over here. But the point is, on a smaller time frame, you look at this, sells down, wipes out this whole move up over here, and then moves up. So I wouldn't be surprised if this moves up here, consolidates around this sort of period here, and then if nothing changes, we then leg on towards 3,500. So yeah, it's these things are just sort of things to sort of consider, sort of moving forward. Whoops, move that one back there. All right, let's move on anyway. We'll have a look at silver. This one, another one that I unfortunately caught on the wrong. I caught perfectly. I actually shorted my biggest sort of, you know, I guess buck move, points move with silver in that, and traded this actual wedge coming down through here, which was just a negative divergence. My shorts were from this area here. Price targets, look, we took them out around the 31, left a bit on the table. Got back into the shorts, and I think I did a couple of little ones around here, and I was shorting around this period here, and then got blown out into close there because I thought, look, you know what, we've got this sort of support area through here. On this other chart, you can see that this support area has been, what a support area, this sort of whatever you want to call a hinge point. It's been a support, it's been resistance, it's been support, resistance, support. It's quite a sort of a prominent figure for it. And it did. It's sort of, if we get into a lower time frame, you can see this dragged through here, held and held and held and held and held, and then bang, sort of popped up there. So look, this was the sort of thought that I was thinking sort of start of the week. I was like, look, maybe if we get up to this 32, that's the time to short. I thought this would have come up a little bit quicker. I thought we would have got a sort of bit of a sort of up and down like this. If it had come up quicker, that would have been a pretty good time to sort of see this kind of move back down over here. But everything kind of undid its moves over the week. It was like, you know what I mean? It was the world's falling apart Monday morning. Everyone's crying. Everyone's like, you flick on the things, and this is why all these sort of news articles and headlines are so stupid because everyone's like, oh, emergency cuts. double cuts. We're going to see 5 cuts. They're going to be supersized cuts. They're going to be emergency cuts between meetings and this kind of sort of stuff. And then everything recovers. Well, mostly recovers. It does pretty well to recover. Um, you know what I mean? And everyone's like, oh, maybe we don't now. It's like, geez, man, these people are supposed to be sort of professionals and that. And, surely you can see in the world and that, yes, it was breaking, it was coming apart. But these things do recover, and this is the thing. I put a post out on when it was a Saturday last week, and said, just keep calm. These things do recover, and bang, we've seen this. Unfortunately, I tried to get a little bit tricky with this, with a second or a third dip down, and got sort of schooled a little bit on this. So lessons learned. That's fine. I made the money, so you can give it back, I suppose, but still not a nice feeling. Anyway, look, enough of my actual trades. Let's look at what we're doing here. So this is a uh, trend line that we had sort of all the way through the year, obviously carved through it. We're back up now. This is going to be an important area here because realistically, all things considered, and it's great that we've sort of bounced up and done all this thing. We're up at the 618 retracement, which we know is a potential sort of strong reversal area. It's also testing the underside of this yearly trend at the breakout point, which we also know is a potential area for rejections as well. So anybody that tried to buy that trend will be thinking, okay, boom, it closed very bullish. Everything closed very bullish. So it's interesting to sort of see what will sort of come of the weekend. These moves were just unrelenting, and typically an unrelenting move, I mean, it was a bit of sort of thinking around here, of course, but typically these unrelenting moves are sort of squeezing shorts because a lot of people got short here. Not everybody was short up here. I got some great entries. I was short on gold from like, 3150s. I banked on the way down. That allowed me to have that sort of money to sort of give back, I suppose, on the way back up. Same with silver. But not everybody was short from up here. And if you tried to sort of do it short like I did, you got squeezed through this period here, and it's really just unrelenting. So, like, good on the people that sort of held it, but bought the lows and sort of rode that stuff back up. I mean, that's a great trade. Um, I would think we would see some reaction, and I'm surprised how bullish everything sort of closed. So we'll see what happens come the new week, see if there's any headlines over the weekend. From a technical perspective, you would say that this is probably going to see a reaction. Should this thing just move back straight up at through here? Well, okay, the technicals are out the window and it means nothing. And, I don't know, we look back up at 33s possibly, undo the whole move. It seems a little bit of a sort of crazy turn of events. One thing I did notice sort of throughout the week though was that the market seems kind of a little fatigued with the headlines. Same sort of, and I said this as well, I put a post on X and that sort of saying that like, it's like when war first starts and everyone's like, well, war's broken out and oil flies, gold flies, does all this sort of stuff. Think about sort of if you hear a headline about Middle East now or a headline about Ukraine. It doesn't move the market at all. The market doesn't care, and it happens quicker and quicker. Ukraine, it happened for quite a while, like it was still affecting the market. Middle East, it happened as it happened, but then after about 2, 3 weeks, um, the market just was like, okay, yeah, great, we get that. We've already done, and we've moved on. And that's the thing that sort of people go, oh, yeah, how could people not care and all this kind of thing. It's not about, well, in this instance, it's not about that. If it's about what the market's doing, and if the market doesn't care and doesn't react, well, I'm sorry, but it's not relevant. There's a lot of things going on in the world that, just don't affect the market. And we're here to predict the flows and sort of see how the market reacts. But so it'd be interesting to sort of see, what comes of all this sort of stuff because certainly, there was a couple of, I mean, the last headline was China bump re-bumped up theirs to some stupid number, 120 or something. Basically, they said, look, it's not viable. And this is the thing as well. If it's 80% or if it's 100% or it's 300% or it's 400%, it doesn't matter. It's not viable. You could make it 1,000%. They're not going to do it at 100. Well, they're not going to do it anything above this. So, the market kind of goes, oh, that's great, good on you, whatever, we don't care. And it shrugs it off. And this is possibly what's led to a bit of a correction of this over exaggerated moves, because that's what they were. They were over exaggerated moves. Like there was no need for, these things to lose 15 or 20% off this kind of stuff. It's just stops being hit, wiped out the whole year. I mean, we saw before that move on gold, the previous one from years ago, that wiped out everything. Anybody that's long and just holding, bang, they're out. Okay, get back to business and maybe even take it out the top. These are the potentials of things that we could be seeing. So, what I mean, it doesn't mean that this bounce and the reaction here will sell it back down over here because the market's starting to just disregard this kind of news. And to think if negative news is being ignored, only positive news will add to gains on these kind of things. So I think we could definitely see some more upside, particularly on the industrial metals. So yeah, be watching to sort of see what happens around this area here. Should this thing reject, well then I think we could sort of look to see, how committed they are to sort of selling this down and sort of see where could they sort of try to sort of pick it up. I did sort of put a post middle of the week and say, look, this is the level that it needed to hold. This 50s level, it obviously just kissed into it and then bang, reacted back up. I thought we might have got one more push down here, hence these little arrows over here. I thought this would be the little area to sort of either get long or to, confirm a short. It obviously didn't come back here and then just ripped up through there and finished very, very bullish throughout the end of the week. We did have a little bit of US data for what it's worth. We had the PPI, which again came in weak. So just another cross in terms of US dollar sort of strength, basically. That's it's funny because sort of like when your DXY is ripping up to the top, everyone's like, US dollar exceptionalism and all this kind of stuff. How quickly the wheels fall off this sort of stuff. But the thing is, it's sort of like they've been saying for a long time, Trump wants a weaker dollar. They want yields down. They're not getting yields down, but they're definitely getting that weaker dollar because everybody's bailing out. So yeah, it's very, very interesting times. All right, so yeah, basically just recapping on silver. If we see a reaction through here, look for sort of, I'm going to be looking for sort of where these pullbacks may sort of come down to. Look, it's overbought. This is on the 4 hour. If you look on the daily, again, look, this thing closed very bullish. Should this thing continue, you're looking back up to undo that big move there, 33.90. So this thing could definitely have some legs on it, should they decide to just keep running it back up through here, which would be just an insane V shape. V shapes are not very common, but they are sort of at periods where we can see it just absolutely wipe the book, and then back to business. So we'll see how it goes. All right, so tick along. Aussie, another one. Aussie actually, this is a big move here because of like it had its biggest one day move, and then loved the trying to think what headline it was. Um, the Trump one where Trump's like, get ready to buy or something like this. So, no, the pause on the tariffs, and it exploded up and come up, and look, I pretty much almost onto this. So, I did in yesterday's video say that this is an area that I was pretty interested in. This 78% retracement, because this, if you look on a weekly, is that weekly open, and that's a bullish engulfing week with a 59 low. Look, it's still overbought despite this sort of big pull down here. So bullish engulfing can expect continuation. Aussie, as it does, it loves doing these sort of things. If you look at sort of back in, I've covered this a couple of times. I may have wiped the chart with these ones. I'll have a look on that other Aussie chart. Here we go. I typically reference this kind of stuff with Aussie. It builds a support, does a fake out, and then look at the continuing move. Builds a support, fake out, continuing move. And we've seen this happen a lot of times with Aussie. This is potentially where we're at right now. Whoops. This one here. Make it a little bit of thing. We can all see where it is. This is potentially what we're seeing here, which we can see these large resulting moves. Now, with Aussie, it's been fun because it has not been reacting to any of its normal moves. You know what I mean? It's normal correlations and that sort of like copper was screaming through the roof. Aussie, obviously, in the scheme of things, this is like before it sort of sold right off. Aussie's, as you can see, pretty much on its lows. You know, it just has not, it didn't recover. It was choppy, 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 didn't recover from the lows down here. Equity markets were at their highs. It's at its lows. You know, we're not talking just this week. We're talking over the last month before we sort of start to see things pull back. So you know, they're the kind of things typically that can sort of see Aussie really prosper. Like, you know what I mean? Like it's a large commodity currency. So copper moving up should be moving it. Gold up should be moving it. None of these things are really affecting it. Obviously, the big sell-off, well, that affected it. But as we see a lot of these things recover a little bit, Aussie was a very great choice for people, and they bought that straight back up as well. So look, if it comes out the top of 64, it's back into this larger range, and as we sort of continue and see all this sort of stuff, it's wiped out everybody. Even this period here where it sort of wiped out prices from 22, we got down to, if you look at this is on a weekly chart. What was the level? Yeah, back to March 2020. This is COVID lows. You know what I mean? Only sort of like for the 1 week prior and the open of that tweet, that 2 week period, have we been that low going back to, you know, we even sort of went lower than GFC. You know what I mean? Like Aussie is absolutely bashed. It is absolutely low. So this could just be one big range with one big stop out of everybody before it rips. So if we see US dollar start to sell off, and by sell off I mean sort of really get smacked down, it's not necessarily like, okay, so it's not necessarily that, you know, Aussie is a great buy and everyone's like going, yeah, cool, good, now it's time to buy Aussie. But, you know, it's benefiting mainly just from incredibly weak US dollar. So that's why you can use DXY as a sort of bit of a barometer for US dollar across the board, because obviously it's a basket, even though it doesn't include Aussie, um, for the fact that market is just dumping US dollar. You know, other things are obviously benefiting differently. I mean, if you look at the two charts side by side, I mean, and this is emphasizes the point. I mean, this is where we are. This is euro. Yeah, how do I put that on a weekly? So you got, so it's obviously different charts. Euro's like sort of screaming right up at sort of through these highs. Aussies is still down at its lows over here. So it's not like, okay, yeah, DXY, yeah, you can use that as a thing for Aussie. But the thing is, because they are selling off US dollar across the board, Aussie is still going to benefit a little bit of that, because they're not just, okay, they may choose to buy euro over Aussie, hence why euro's up over here, Aussie's still down over here. But just because they're selling US dollar against euro doesn't mean, and you're seeing DXY sell down, doesn't mean that the Aussie dollar is going to be immune from that and not benefit at all from that. So if they continue to sell DXY down, you're going to see Aussie benefit. You know, if we see Aussie above 64, if we see DXY down, you know, into the mid 90s, you know, Aussie is going to benefit. Is it going to go up here? No, probably not. Till you get, you know, equity markets back on board, till you get the trade thing sorted out, till you see metals, well, at least copper, sort of bounce right back, and you see sort of China sort themselves out a bit as well, that'll get Aussie back up over here. But it doesn't mean that Aussie can't get back into the mid 60s just off general US dollar weakness across the board. And this could just be a massive sort of stop out of it all down here. Because remember, you know, Monday, everybody was calling for the end of the world, and people were sort of like, oh, here's a big bear flag. I saw people sort of say this, you know, this kind of thing here. Try to select it. This thing here. That's what people sort of call it, you know, there's your bear flag, and it takes you down to the full lows. And look, I mean, we're not out of the woods yet. You know, if it comes up above 64, we know this is a fake out. This again could just be sucking everybody in, and maybe we do see something, and we see consolidation around these areas here. But that's a bullish engulfing candle, which typically denotes continuation of sort of bullish momentum. So I wouldn't be surprised at least to push up into the mid 63s from here, and then sort of see what the market does, see what sort of people's risk appetite is like at that period. But certainly, yeah, that recovery, I mean, in 1 week here, from low to high is 6%. You know, nearly 400 points. That's a big move on Aussie. All right, cool. So if we get onto the lower time frame, how can we look at it? Again, look, it just kept going up. It does seem like it's grinding a little bit here. This is an area that I'd like to see it sort of hold. Let's get back onto that other chart. This is a more high time frame chart. So as I said, this is our driver. I know I just sort of covered this. Haven't seen what China's doing in that, but that's sort of moving down a little bit. RBA, I would say, still a little bit of a handbrake on thing. Actually, no, I did see a headline saying Bullock sort of throwing water on the idea of all the mass cuts. So I guess that would be your little three-prong approach with Aussie there. But look, it's overbought. This last little period here, let's get the arrow off here. It's just grinding through everything. I mean, typically that's not a continuation kind of thing, but you know, again, I wouldn't be surprised if it comes up to undo this little move here, and then we see some sort of cooling. But yeah, so 63.20s. So I think we could still see a little bit of upside. I think this momentum sort of finishing so bullish with silver, gold, Aussie. I think that's going to flow through at least to early Asia, unless we get some sort of headline to sort of like sway these things really. But again, this is a big area, big congestion area. We could see the whole way along here. It's just been chopping through here. We're back up into this chop zone. You know, this is the panic. This is all in one day. We've come back up here. People made 6% doing this kind of stuff, and you know, on it goes, bang. So yeah, we'll see how Aussie sort of works out sort of come early Asia. All right, for below, we've got DXY. As I said, this thing is getting absolutely just creamed down here. We did see a slight little, what was this? If on the 1 hour, I was having a look, there's a slight little negative divergence, as you can see, coming down into this area over here. So just a 1 hour, and so it's not going to be a trend changing thing. But you can see that the market did decide to try and buy it up off this level. That little second touchdown here, you can see this negative divergence coming into effect. Broke that little short-term trend, that's fine, and then they sold it down into that close. I don't think the move's necessarily done, but we have absolutely wiped out everything. Look at these lows down here. So we're down here 99 or so. This again is taking you back down to, taking you back to April 22. So we've seen some massive moves in DXY, you know, between then and now, and it is really sort of just creaming through here. And honestly, this looks like it could be moving down towards 95, to be honest. I thought that would have got a little bit of a push up before it went sold down. I mean, if you get on the stupid low time frames, you could see, where was it? This period here, I think, was a little bounce. It got cream. Actually, I don't know where we are. It's hard to keep up with these levels. Yeah, anyway, it got a little bit of, it was just this point here actually, so saw that sort of first time down under 100, sort of trying to catch up with where we are. Moved up, found resistance on a previously marked out level. I thought this move may have got a little bit higher here before taking out the lows, but obviously not. They jumped in quickly and moved it along down there. So look, you could say that it is trying to find some sort of support through here. We got two touches here, broke its little short-term trend. Look, the only thing that could get DXY going now is just a sort of, I guess, is a value sort of value proposition. I don't know if that's the right word for it all, but basically a value play. Like, you know what I mean? It's just so incredibly dirt cheap at these levels. So you may see some profit taking, but fundamentally, it's obviously screwed, hence why it's been smashed. Till that changes, you're not going to see a sustainable move. But it doesn't mean that you can't see people go, hey, you know what? Like we always sort of say with these things, if you're going to sell this thing down, I've been saying this the whole way through here. For instance, this little level through here. If you're going to sell it down to this point here, and you're at this point here, why not drag it up and then sell it down there? Because obviously that move from there to there is a lot greater than that move from there to there. So it's not to sort of say that you can't see some little repeat of this kind of move where they might sort of go, hey, look, let's buy it up a little bit. and then sell it down like this. So I'm open to this sort of idea. Look, the bleeding somewhat got stemmed through here, but I don't think this is a bottom necessarily. We are sort of finding support around that kind of level. Dancing around it. It's taken out the lows. This is July 23 lows, and we saw the rip off that level. But again, the fundamentals are different now as they were to there. But if you look at these drastic sort of sell, like every time that it's really ripped up high, look at the previous price action beforehand. This is like just getting absolutely shredded coming down here, shredded down here, shredded down here. And the market decides, okay, that's enough, and they buy back up. I'm not saying that, okay, you're going to see a move like this, but the thing is, this is what could see a little bit of a move, just for the fact that it is absolutely getting hammered down here. I'm not saying that this is the low and they're going to buy it up from this point here, but if you look at previous price action, these are the kind of preceding days that you see before it does start to see some sort of sharp reversal. So as much as sort of everyone says, look, it's going to 90 tomorrow, look, I do think there's potential for this to get down to 95. I'm open to the idea that this thing could potentially sort of, hold this little level here and then sort of see some sort of squeeze. But yeah, we'll have to see how that goes. Certainly everything's closing very much in one direction. So that almost makes a very obvious trade. And of course, the obvious trade puts the pain trade in the opposite direction. Onto a lower time frame. Again, let's get these things out of the way. Oop. Let's just do this for now. Break this one. Let's just put it there. Whatever. I think, look, realistically, close the gap and you could see some sort of squeeze up through there. Take out the lows here, 99, which is at 99 on the, pretty much 99 on the dot. Underneath 99, continuation, and it's just going down even further. We'll see how we go, but yeah, let's put a little box around it. Probably that, actually. So, because it's so damaged, getting above just a couple of little highs doesn't mean anything. So I would say, you want to see a convincing bounce. That's not saying it's a convincing bounce, but it may be enough to get it up over here. Breakout box. I mean, look, this thing is, yeah, there's not too much you could say about this at the moment. It is absolutely getting hammered. The market does not want a bar of US dollar. All right, so that's DXY. Took along. We got USD China yuan. We had that little sort of test out at the top of the week. It means absolutely nothing. Back down into this big range. Look, I thought it might have actually found a little bit of support through here and sort of broken up, but as you can see, as soon as they want to sort of move it up, bang, they move it down, they sell back into it. So this could potentially lead to that fake breakout kind of thing. Look, I would have thought that this would have sort of held a bit more. I thought they would have sort of actually sort of consolidated it a little bit up around over here, but they've just driven it straight back down. As I said, it's not a big fast moving thing. So going out 1% is a fair move, but coming back 2% is quite a big mover for it, because as you can see, it doesn't move a great deal sort of through the sessions. It's a very grindy kind of thing. So maybe that was just a quick sort of tester for it all, and now they're just hammering it out the bottom side. It'd be funny if, because US dollar. Sort of the US is sort of like saying, hey, don't manipulate your currency to China to try and sort of starve off the tariffs. Whereas that's what Trump wants. Trump wants a weaker dollar, and Trump's getting a weaker dollar. It'd be funny if that actually turns out what they're doing. So yeah, US sort of playing by their own rules with it all. Look, it closed down obviously on this little previous resistance. See if this sort of holds for support. If this breaks through, you're looking at this major support. And as you can see, this to be a bit of a range with a little fake breakout over here. If this continues down, that might actually get that break out the bottom down over here. And this will be one of the ticks for Aussie. So we have the three ticks. We have what the US dollar's doing, we have what China's doing, and what we have the RBA doing? And if this breaks out of the bottom down here, this is a big tick for Aussie going higher. If the RBA continues to disregard all these stupid calls for mega cuts, inter-session cuts, emergency meeting cuts, all this kind of stupid headlines, that's a tick for RBA. And if we see DXY down into mid 90s, that's another tick for Aussie as well. So that'll be our three-prong approach for Aussie. So yeah, certainly interesting to see where this thing goes at the moment. It's closed here. I would imagine some sort of little bounce around this area, a little bit of rebalancing, but certainly it's just back into the middle of its range. So it could be back up over here, it could be down over here. This trade war thing, I guess, is really what we have to sort of see with it all. And finally, we got copper. And copper was one that I said, so again, look, I bought copper down here. I thought this is great. This is a big sort of confluence of it all. We got the top side of this big sort of falling resistance. We got that mega rising support. We got the horizontal. That's 3 on a daily time frame confluence down here. I bought it here, sold it here. Hindsight, yeah, should have held it. As so many of these things do. This thing started to sell down a little bit before all the drama of last week. It also got smashed here, but as you can see, we had that little sort of capitulation top that I marked out a couple of times as a reference, a couple of times that was happening up over the top here. It lost 25% of its value from that capitulation top. So these are beautiful things to look for if you do see them and hold strong. I did take an entry down here on this little pullback. I got out of it very quickly, so that's a win in that sense because it got absolutely demolished the next day. It is bouncing back. It isn't bouncing back as much as the other ones. Gold obviously is slightly different. It's that's a precious metal. This is a more manufacturing metal. This is more akin to sort of what we're seeing with silver. Silver's probably outplaying gold, outplaying copper in terms of its revival. But again, look, copper was selling down, so you really got to take copper from here when you're looking at how much has it recovered from that move, because this is the move down from when all the drama was happening. This is the move here. So it gapped down and then it sort of dropped down here. It was already sort of selling down. I was trying to hold at this level here after the capitulation top. So really, if you're going to sort of measure apples with apples, you'd sort of look at sort of silver's sell down from the break of the wedge to this kind of breakdown here. And as you can see, it's coming back up to the 618 retracement, back into a previous support level over here. Closed super bullish, like everything did. I mean, everything closed bullish here. And, it can't just be sort of US dollar selling on, like, sort of closing on its absolute lows. And everyone's like, oh, let's go buy copper. But the thing is, everything closed very bullish. So we're either going to see a big gap up, a continuation moves through the thing, or it's going to be sort of, okay, we suckered everybody in, everything looks super bullish, and then bang, they pain trade, and they rocket back down the other side. From a technical point of view, strong confluence, RSI looks supported to move it. This thing could continue back up. And I think that's about it for the charts. So a quick sort of look over here. What news we have sort of coming up for the week. So come Monday, look, a little bit of sort of China-related data. These numbers are expected very low, so it'd be interesting if these are taking into account the most recent events, because obviously these are looking like massive drop-offs here, and I guess they must be somewhat reflective of the last sort of data and that, because I know a lot of people they had some big numbers. Actually, let's have a look at what they were the month prior, because the thought was, so if you look at this and unpack these numbers here a little bit, this is the trade balance and that, it's normally sitting around this 600-700 kind of thing. Last month was 1,200, because the idea with this is everybody was front loading before the tariffs. Everyone knew the tariffs were coming. So they're like, oh, quick, let's get it out, and boom. And that's why sort of you're seeing big, massive push-up numbers from the norm here. Now you're sort of seeing things bang. So it looks like a drastic drop-off, but really, it's back, it's a little bit under what you would normally expect, but it's certainly back into its range. Now, whether the market sort of sees this and goes, oh my God, it's half the size of whatever it was. We'll see how the market reacts to that. But if you look at the number there and you look at the number there, it looks like a massive drop off. But of course, if you look at sort of where things had been previously, yes, it's below what we had seen previously. But this kind of period through here, as you can see, trade balance is starting. So trade war starting, trade war ramping up. This is what's given us these big numbers here. So we'll have to sort of see how how the market sort of reacts to that kind of sort of data there. But certainly it's another sort of strike against things in terms of this trade war and how we could expect things to play on. Apart from that, it's not a great deal of data sort of coming out through Monday. Got a couple of speakers. These are interesting enough. These sort of guys that are talking at the moment. It's a bit gets buried. The minutes, since we've had this sort of the press conferences after the RBA rate decisions, the minutes kind of come a little bit irrelevant. Same with the FOMC minutes. You've got sort of Claremont change, so that's the employment numbers, slight tick down, so not looking great over there in Europe. Could see some sort of little tick up on DXY, but I find UK data doesn't really affect US dollar as a broad sense too much. DXY Tuesday, not going on. We've got CPI in Canada, so looking to stay relatively flat. Move on through the day. So it's looking like a pretty quiet sort of start of the week, data-wise. Got a bit more China data on Wednesday. Industrial production, slight tick down. GDP, slight tick down. So it'd be interesting again, see how is this stuff sort of affecting it? Because the big thing is like, okay, everyone's sort of drawing lines and there's this and that. Like, everything you see with China, despite them sort of saying that the housing market's stuffed, the housing market's stuffed everywhere, but everything you see in terms of the news says that China's just woeful in that. But then you watch other parts of it, and it seems like some parts of it, the innovations kicking along. The world's still ticking over. I mean, they're still producing stuff over there. It's not like they're in a third world country, and this is why they've taken such a hard line against the US, is because they are the second largest economy in the world. They are doing seemingly good things in terms of sort of innovation and production. And they do play their role in the sort of world stage. So they're kind of like, what, we're not Vietnam, we're not Cambodia. You can't just sort of bully us and tell us what to do. That's why we're sort of seeing a bit of a sort of a sticking between the two of those two. Anyway, regardless, we'll see how this data, they're expecting a little bit of uptick on their retail sales. What we got? Wednesday here, retail sales for the US, slight tick up. If we're seeing people are still out there buying, it might be a slight sort of show of faith in the US economy, and that's what it needs at the moment. It needs some sort of faith in their economy because they are absolutely over it. Everybody they can't sell and get out of the US as quick as they can. I put a post on one of the titles of one of the videos I did, sort of going back, I think maybe early March, was a flight of capital from the US. And again, I didn't call this in the size of it and the magnitude, but it turns out that was very good sort of foreshadowing for over the things to come. And that's what we have been sort of seeing, particularly over the last week, but like over the last couple of months. Moving along, we got rate decision from Canada looking to hold. So very light. I don't think we have any Aussie data this week, actually. We got employment numbers here. This is the highest. This is an ongoing joke with me every month and that, because they're so drastic. They spam 20s and they just never get it right. And they said 40,000, we got minus 52. Yeah, so we'll see how they go. Okay, yeah, 30,000, they got minus 52. Now they're saying 40,000. Yeah, look, I mean, this is just a guess here. Look, I would say they're probably close to it this time. I mean, we're due for sort of some snapback with that. Unemployment rate going up. So unemployment rate going up, these are two sort of mixed sort of signals here, because if the unemployment rate's going up, that's a tick on sort of cut side of stuff. You know what I mean? If it comes at 4.1, that's bullish. If they, hawkish, bullish, whatever, better for the Aussie. If it goes up, then it's weaker for the Aussie. Employment change, though, if you go from -52, there must be some explainer for why we had such an outlier month there, because that's not even just that, you missed the numbers. It's also a massive, massive negative. You know what I mean? Where did this come from? What's the explanation for the fact that, we're doing 40, 50,000 a month, and then all of a sudden, not only do we get less than that, but we get -52. There's got to be an explainer for that. But the point is, yeah, if we see 40,000, that's still a big number. It's a big kick on. Obviously, it's a big sort of move up from sort of previous month. Um, that aside, as I said, I think there must be an explainer, so you kind of almost disregard this a little bit. But 40,000 is still a fairly decent number, so that's a positive for the Aussie. So you're getting two sort of conflicting sort of predictions in terms of a tick. This is a tick for Aussie strength. This is a tick for Aussie weakness. Should these numbers come in as they are there. Confidence, I expect this still to be shot in a negative number. So you got the euro looking to cut. Now, this could affect things, and you might see a little bit of pairing of euro in a lead up to this. So if they're expecting to sort of cut, you might see DXY recover because euro makes up such a large part of DXY. You might see DXY sort of recover a little bit just in anticipation for a 25 base point cut with euro. The pattern we've seen more recently has been one very much of the cut happens and then the currency appreciates. So by seeing that, that's basically a buy the rumor, sell the news kind of thing. So you could probably see a weakening of euro, which would push DXY up prior to Thursday. And then once Thursday happens, the cut happens, they sell into that and bang, back on with the show. So that's something that could see some DXY strength partially sort of through the week. Press conference after that, and then bank holidays and all this. What's this? Is this Easter or something, I think? Cool, and that's it. So yeah, pretty light on the news this week. A couple of bits and pieces along there. But yeah, we'll see how we go. All right, that's it from me.